Hello again, and thanks very much for joining us. And here are the business stories we are tracking at this hour. I'm Michael Naz. We begin the news from the power sector. The federal government has reiterated its resolve and openness to more private sector collaboration as the only viable means of solving Nigeria's energy needs. The Minister of Power, Abubakar Aliyu, made this known at the 9th edition of the Nigeria Energy Conference held in Lagos on Tuesday. While delivering the opening address of the conference themed Affordable, Reliable and Sustainable Energy through Collaboration, the minister, represented by the Permanent Secretary, Ministry of Power, Temitope Fashidemi, sharped on the need for the power sector to boost its access to energy through deeper collaborations with the private sector. The minister insisted that the task of leveraging investment opportunities in the power sector requires good policies, investments, and the right incentives for investors. He added that such collaborators remained essential to sustainable energy supply. The 11 electricity distribution companies generated 398.16 billion naira in the first and second quarters of the year, and this according to the National Bureau of Statistics. It noted that quarterly the revenue collections declined by 7.97%, adding that yearly the revenue collections were 11.42% and 1.71%. The Bureau said the total customer number in first quarter of 2022 stood at 10.63 million and 10.81 million in second quarter of 2022, showing a rise of 1.67% on a quarter-on-quarter basis. On a year-on-year basis, customer number in first quarter of 2022 declined by 1.36% from first quarter of 2021 and also fell in second quarter of 2022 by 2.27% from second quarter of 2021. Metered customers stood at 4.79 million in first quarter of 2022 and 4.96 million in second quarter of 2022, indicating a 3.53% increase quarterly. It noted that yearly estimated customers declined by 9.45% in first quarter of 2022 and 10.45% in second quarter of 2022 when compared to 6.45 million in first quarter of 2021 and 6.53 million in second quarter of 2021. With mounting domestic debt now standing at 20.95 trillion naira as of June 2022, Nigeria's domestic debt service rose to 5.24 trillion naira in 30 months. Latest data on the Debt Management Office website has revealed that domestic debt service in the first quarter of 2022 was at 664.73 billion naira, representing a 0.6% decline from 668.69 billion naira in the second quarter of 2022. This implies that the federal government has reserviced domestic debt with 1.33 trillion naira in the first half of 2022, a 43% year-on-year increase from 935.46 billion naira reported in the first half of 2021. Further breakdown revealed that the government domestic debt service was at 2.05 trillion naira in 2021, a 10.8% increase from 1.85 trillion naira in 2020. Following a massive budget deficit, the federal government recently has borrowed aggressively through treasury bills, bonds, savings bonds, and sukuk to support infrastructure development across the country. Experts have raised concerns as the federal government continues to obtain new loans from both local and external sources, despite growing debt profile and servicing costs. Now, the Central Bank of Nigeria has said its $200 billion non-oil export revenue target policy has introduced new commodities to the market and created new channels for dollar earnings. The principal manager, Trade and Exchange Department CBN, Nena Ezekanaya, said the policy named FX incentivizes export earnings to encourage more dollar accruals to the economy and has major players in the solid mineral space as contributors. She gave feedback on the scheme at the Finance Correspondents Association of Nigeria yearly workshop in Lagos. According to her, non-oil export proceeds repatriation rebate scheme remains the major anchor of the program, which has a policy thrust to raise $200 billion in forex earnings from non-oil export proceeds over the next 3 to 5 years. Speaking on iBrandTV Business Breakfast, macroeconomic analyst Baanu said that the shift in strategy has been vital as it is showing promising signs in the accruals to FX reserves, as well as checking inflationary trends in the country.
Yeah, it's a good move by the CBN in order to boost local production, number one, and also to boost the FX liquidity in the system by having the overall quality positive balance of foreign trade between Nigeria and other countries. And if you notice, we've seen this significant result in terms of the foreign trade we are having. In the foreign trade data that came up about 2 weeks ago, in Q1 and Q2, Nigeria had positive foreign trade balance. There's a surplus of foreign trade balance. And this is, and the Rt200 is part of the significant result of that, the positive outcome of the foreign trade. And this is expected because when we are having a kind of debate from the other territories, apart from a study of goods in terms of the dollar terms, which you are going to, okay, you know, is going to boost your own earnings as a company or as an exporter, then you are looking at the other side of the rebate you are having. The amount coming in is a good one because of the FX liquidity we are having in Nigeria. So because of that, it's a good one. But looking at the rebate paid for that transaction, I would say it's a very huge amount of money. But for the start, as CBN is doing, I want to believe it can go on forever and ever. But for the start, for the next 2-3 years, if the rebate continues that way, then the CBN will continue to look at the sustainability of that program in order to know if they are to reduce the rebate or even to increase it in order to achieve their 5-year target.
As Nigerians continue to lament over the escalating cost of living, the prices of cooking gas surged by 101% in the last year. The National Bureau of Statistics and its cooking gas price watch said the average price of 5 kilograms of cooking gas increased from 4,397.68 naira in July to 4,500 or 456.56 naira in August. According to the Statistics Agency, on year-on-year basis, the August 2022 price was a 101.17% increase over the cost of 2,215.33 naira paid for the same volume of gas in August 2021. And meanwhile, the price in August experienced a 1.34% increase on a month-on-month basis. The report added that the Taraba recorded the highest average price of 4,925.44 naira for 5 kilograms cooking gas, followed by Adamawa State, where it cost 4,920 naira, and Lagos State, where it sold for 4,782.50 naira. Katsina State recorded the lowest price of 4,020 August, and followed by Ogun and Yobe at 4,057.14 naira and 4,078.46 naira respectively. According to a business analyst Charles Fakruha, while speaking on iBrandTV Business Breakfast, Nigeria's lack of proper gas infrastructure is responsible for the surging cost of liquefied petroleum gas.
We're liking this cooking gas, which is LPG, you know, just as a PMS. We have abundance of gas in Nigeria today. And at one point in time, we're even exporting gas you know. And even recently, we are talking of exporting gas to Morocco using the West African pipeline to supply gas to Morocco and then maybe finally to Europe. Yes, the issue there is we've been told that as the price of crude goes up in the international market, it also affects the price of cooking gas here in Nigeria. However, what I would say is we don't have that infrastructure for gas because we have enough abundance of gas to feed the domestic market. But because we are not processing, the gas infrastructure is not adequate to process and supply gas to the teeming Nigerian population who have now switched off who have now switched on to use gas, because gas that is LPG, is a cleaner energy. You know, when you say liquefied natural gas, it is methane. But when you now say liquefied petroleum gas, it's butane and propane, which is more cleaner, environmentally friendly, and that will not serve as our energy transition in terms of sustainable development. So the government has said yes, through CBN that they have intervened about 250 billion naira to see that they assist people in that gas production value chain. So as these gas are being produced, they are fed to some of these facilities so that where people, the retailers, can now take gas from there and supply to the end users. So we need to do more infrastructure in the gas value chain so that we will stop this importation of gas that we're having. It is so ironic